Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. On this episode, I'm joined by Ed Steer, a man who has spent more than 20 years watching, analyzing, and writing about the precious metals markets. He is currently the publisher of Ed Steer's Gold and Silver Digest. We're going to get his thoughts on gold outflows from London, extremely low silver inventories at the LBMA, whether paper manipulation of the precious metals market is reaching its dramatic conclusion, and so much more. I hope you'll enjoy today's conversation with Ed Steer. Ed Steer, it's great to have you back on the program. It's been a while since we talked. I'm going to open the show with the same question I ask every guest. And in this case, we're focusing on the precious metals market. So I want to ask you, what are the main themes and trends you're currently watching when it comes to gold and silver that you think more investors and stackers should be paying attention to?
The whole precious metals world has been watching the amount of gold and silver being shipped into the COMEX since the beginning of the year, and because it's just been awesome to watch. It's still ongoing, especially in silver. There's that front and center that people should be watching. But the other thing that's always in the background and getting closer and closer is that brick wall, that structural deficit in silver, which is now in its fifth year. How much silver is left in the float in London remains to be seen. It's down to like 300 million ounces or less than that, well under that now. You just do the math, and sooner or later, there just isn't going to be any silver left, and I watch, the amount being flown into London, so far in March, and we're only 6 days into March right now. I didn't do today's numbers, but they've already flown in 25 million ounces of silver, and nothing has been shipped out. And in gold, so far in March, they brought in 1.543 million ounces and actually shipped out 840,000 ounces. And you have to wonder who would be shipping that kind of gold off the COMEX. It's not just going in and sitting there; it's actually moving out. So, that's 840,000 ounces is a lot of gold, almost 30 tons or 25 tons. It's a lot. So it's these sort of things that are going on in the market, like the deficit and the flows into the COMEX, and also the flows into GLD and SLV. It's just absolutely amazing to watch. SLV, since the beginning of the year, has been about 15 million ounces of silver deposited in SLV. But, since the beginning of the year, SLV inventories have dropped 28 million ounces. So you add in the 15 million plus 28, there's been 43 million ounces of silver shipped out of SLV so far this year. I mean, that's just unbelievable. It's incredible what's going on. And these are the things that I'm watching, and it just shows that the drain on the physical market in silver and in gold is just absolutely off the charts.
So who are these market participants? Obviously, we can't know exactly. Is this sovereign nations, in your opinion, standing for delivery when it comes to gold? What are the forces? Who are the forces behind this? This is obviously a topic of some contention, but in your opinion, who are these big players who are moving these massive amounts of precious metals?
Okay, well, if you look at who the issuers and stoppers were in February, which is the last big delivery month for gold, it was all of the big bullion banks: J.P. Morgan, Citigroup, Deutsche Bank, HSBC, Standard Chartered, PNB Paribas, a French bank, Bank of Montreal in Canada, Scotiabank, every Wells Fargo, B of A, the whole nine yards. They were issuing from their house accounts and stopping for their house accounts and for clients. There was absolutely gargantuan amounts of silver. So these are the big players, the heavy hitters, the central banks, the bullion banks, which it looks like one giant book squaring operation, which has been going on now, for not just in February, but before that as well. This isn't ma and pop people buying gold and silver and moving it around. These are the really big players with, tens of billions of dollars to spend. And, it's a rush from paper what they're doing is, they're doing what we've been telling, everybody to do, in the retail space, is just hold the physical metal in your hand. And finally, the big boys, the big players in Europe and Britain and North America have gotten the game too, and we're seeing the results of that, not just in February, but what's going on right now in March and in January as well. This is huge, and we're seeing a gargantuan shift, and we're in the middle of it right now. And some people have brought up the fact that the BIS has got some sort of new rules coming in regarding derivatives in gold, allocated versus unallocated, and there's also talk that they're topping up Fort Knox from all the gold that's been shipped out of there, which I find very easy to believe. But these are the big boys, the heavy hitters, and the big with the deep pockets that are moving this gold around, and it's so big, it's a standout feature right now.
Hey guys, a quick break to hear from today's sponsor, ARC, silver, gold, osmium, and to let you know all about the special that they are offering at this point in time, which are 2023 silver kangaroos, 1 ounce coins, mint fresh at only $2.07 over spot. So be sure to reach out to owner of ARC Silver Gold Osmium, Ian Everard, today at 307-264-9441. You can also contact him by email at ian@arcsgo.com. Make sure to tell him that Commodity Culture sent you. Once again, silver kangaroos, 2023, 1 ounce coins, mint fresh, $2.07 over spot. Well, supplies last. And now, back to the episode. So when it comes to paper manipulation of both the gold and silver markets, these have obviously been very much front and center, at least when it comes to people who are interested in the precious metals space, people wondering when this manipulation is going to end. It seems that the end is always around the corner, depending on who you speak to. These are obviously very big moves. If we take a step back and just look at the overall picture, how do you see this all playing out for the paper market and that manipulation? Do you think we're getting close? You said we're getting close to the wall breaking. Is this something that is imminent, or is it inevitable, but it could take a lot longer than people think?
That famous quote by Hemingway, how does bankruptcy occur? Slowly at first and then suddenly. Well, the slowly at first has picked up enormously in the last couple of months, and the suddenly is just around the corner. But like you said, this has been imminent for a very long time. But this big rush for gold in the last 2 or 3 months, they can't hide their tracks forever. And sooner or later, all manipulations end. And in gold, this has been going on since the first trading day of January in 1975. So that's 50 plus years ago when they first came up with the COMEX futures market in gold. So, this has been going on for 50 plus years. So when they started this thing, to suppress the physical market with paper, they thought it was a wonderful idea, but they never thought, down the road sometime when the fiat currency system was about to fail, how were they actually going to get out of this thing? That was never in their mind. They were only thinking about the here and now. And here we are looking at a brick wall in silver, and also in platinum and palladium, and I would suspect that it's there in gold as well. So we're seeing this brick wall coming up. And how long this is going to last, I don't know. One thing I am watching very carefully is the big four shorts in gold, the big four commercial traders in gold, in the short positions. And for the last 6 weeks in a row, they've been reducing it substantially. And but other than that, if you just step back from the big four shorts in gold, there's just no sign of it whatsoever that the paper market is giving up on suppressing the prices. The bank participation report came out last weekend, and something I follow religiously. I've been doing it for like 15 years. And what it shows is the positions of the U.S. and non-U.S. banks in the in the COMEX futures market. Now, the non-U.S. banks have decreased their short position in gold by a bit, but it's the European banks. They've increased their short positions in gold by two and a half times. They have the largest short position in gold they've ever held, and in silver they increased it by 56% over the last 2 months, and it's just unbelievable to watch this. So they're suppressing the price, and there's no sign whatsoever, like I said, in the paper market that this is going to come to an end. And as Ted Butler, rest in peace, Ted, said, the COMEX and the LME, the paper markets, are there for one purpose and one purpose only: A, to keep the price suppressed, and to protect the shorts. Now, you remember a couple of years ago there was a blow up in the LME nickel market, and the LME, they had to step in solely to protect the shorts. So anybody that was long, betting the price was going to go up on the fundamentals, they got screwed out of their profits, pure and simple. So when this thing comes to an end on the LBMA in London and the COMEX futures market in New York, who knows what they're going to do when that happens, and all of a sudden they're faced with a failure to deliver or something like that, where all of a sudden they're out of something and the demand is so high they got nothing to deliver. What are they going to do? Okay, are they going to sit on their hands and let free market forces take over? Are they going to pull another LME in like they did in the LME and nickel? Nobody knows. But right now the paper still controls the physical price, but you can tell by looking at the price action over the last 3 or 4 months that that's starting to slip a bit. But like I said, this is the slowly part. It's when the suddenly happens that who knows what's going to happen then and what the powers that be are going to do.
You mentioned Fort Knox a little bit earlier. I have to get your take. Obviously, this is been in the news recently, and it's a kind of a good thing in that it's allowed gold to enter the mainstream consciousness a little bit with the talk of auditing Fort Knox. And then also the talk of potentially revaluing the U.S. gold reserves, marking them to market, or some people say even valuing them at $10,000 an ounce or a much higher number. What are your thoughts on both of those topics? Firstly, the Fort Knox audit. Obviously, the U.S. is storing gold supposedly not only in Fort Knox, other locations as well. Is it even practical to do an audit, and would anybody even believe it if they did? And secondly, do you think it's a realistic proposition to revalue the gold on the Fed's balance sheet? And if that were to occur, does that accomplish anything?
Okay, first of all, it's at Fort Knox, West Point, and I think there's some at Denver. So that's where almost all of the gold reserves are. Doing a physical audit on all the gold would be like a hugely long time consuming and expensive proposition. And I think that, everybody doesn't believe all the gold is there. And I'm one of them. I would suggest they say they 8,133 tons or something like that. I would bet that it's A, not all there, and B, what's even more important, they don't even have to audit Fort Knox. All they have to do is go down there and say, okay, fine, that's all very pretty. Now, how much paper is written on this? How much of this is encumbered? How much of it is swapped out, leased out, okay, or some way encumbered that really doesn't belong to us? And if we asked for it back, it wouldn't be there from the counterparty that has leased it. That's the big $100 million, $100 billion question right there. So that, I would save the audit and just go down there and find out how much paper's been written against it. And I think that one of the things that they would find immediately is that the American gold is certainly encumbered in some way or another. And that's all it would take to drive the price to the moon, knowing that, regardless of whether all the 8,000 tons is there or not.
And then when it comes to potentially revaluing the U.S. gold, do you think that's a realistic proposition? And would it even fix anything? People are saying they can use it to offset debt and deficits on the balance sheet. But I mean, even if that amount of gold was there and you marked it to market, it's kind of a drop in the bucket, isn't it?
Yes, exactly. And they'd have to mark it up to like 10 times the price it is today to really make a dent in it. Is that practical? Who knows? But I can tell you one thing is that it would melt down the financial system if it did. And see, the problem is when you have a scheme like this to suppress everything, not just gold, silver, and platinum and palladium, but all commodity prices in general. This has been going on for 2.5, 3 generations. and to unleash it all on the world all at once, even if they mark to market, the current price, people would assume that it's going to go even higher than that. This thing is going to be a bloody mess when it finally does go. And so whether they market to $30,000 an ounce or 3,000 or 5,000 or 10,000, this is going to be a seismic shift in the world's financial system. It's just impossible to imagine how this is all going to turn out. Would it be useful to revalue it? I suppose, but then the side effects in the financial system and monetary system would be a mega earthquake, a 9+ earthquake. So, are they going to risk it? I don't know. It's all pure speculation.
I wonder if you have any thoughts on silver's use in military applications. I've spoken to a few people who point this out, Andy Sheckman being one of them, David Morgan being another, that silver's use in military applications is actually not really tracked, and it could be a very large number. And if you really go down the rabbit hole, could be part of the reason why paper manipulation is going on and why the powers that be want to keep the price where it is. Have you looked into that at all, and do you have any thoughts?
No, this is an area I watch other people talk about, but I don't follow myself. I just don't have time to follow everything. I look at the amount of silver that's withdrawn. Like you take a company like Toyota or Tesla or you pick a company that's used like tens of millions of ounces of silver a year. You never see that go through the exchanges. All of that comes through. With dealing directly with the refineries. They have a contract with the refineries with X amount of silver. So you just don't know. And because most of it is speculation, and I'm not disagreeing with what anybody says, but the fact of the matter is it is speculation no matter who's saying it.
Yeah, that makes sense. And just hopping back to the gold question when it comes to Fort Knox, conversely, do you think China is understating their gold reserves?
Oh, yeah. Well, I've been of the opinion for a long time, as is Alistair McLeod, that their reserves are actually north of 20,000 tons. And I'm on record saying that years and years ago, and so is Alistair.
Interesting. And what strategic advantage does that give the Chinese in terms of having this massive gold supply? They've also supposedly discovered this huge gold deposit as well. They mine a huge amount of gold. They import a huge amount of gold. What eventuality are they preparing for? Is this just about taking their wealth outside of counterparty risk, especially, they've been doing this for a long time, but especially once, Russia's FX reserves were seized, it became very important for nations to have an asset that's free of counterparty risk. A reason many speculate that central banks have been buying gold in massive numbers. When it comes to the Chinese in particular, what are their reasons for having so much gold? Are they preparing for a monetary reset? Because they're also encouraging their citizens to stack gold as well. And some would say, I think Alistair might have actually pointed this out when I spoke to him, that the Chinese citizens' gold kind of by proxy can become the government's gold in a moment's notice in that country.
Well, on the latter question, I suppose that's possible because, I'm sure the Chinese know where every ounce of gold, the government knows where every ounce of gold is and who owns it. But on the matter of why China is accumulating so much, there's the old adage, the old saying that the golden rule, he who has the gold makes the rules. And China has been a great power for thousands of years, okay? And they've looked at the British Empire and the Portuguese and the German and the Mongols and now the American Empire, which is on its last legs. And I guess they're the rising superpower in the world. They're already surpassed the United States as far as I'm concerned. And they're going to be the next global superpower. And when they finally do decide to get around to disclosing what their true gold reserves, then the economic, financial, and monetary power of the world will shift automatically to Shanghai. And they're doing that in preparation for that, plus all the other things that you said, for monetary purposes. And, they know that there are $3 trillion worth of U.S. treasuries that they're sitting there. The Federal Reserve can turn them off at a moment's notice, just like they did for Russia. So, they're not, they may have been born at night, but it wasn't last night. and they're preparing for everything, and they're giving this gold to their citizens. And I think, like you said, you can be nefarious about it and think the government will actually seize the private citizens' gold. But what I think they're actually doing is they're allowing they're trying to save their own citizens by allowing them to own gold, so that when everything goes, south, that the citizens who have been smart enough to buy the stuff will actually be saved by that. Like just like you and I are doing, everybody in North America and Europe, we're buying it to, as we watch currencies being debased and the purchasing power of the dollars go down, or whatever your currency is, we're buying it to protect ourselves from that. On a days like today and like yesterday, I mean, we're seeing that, gold and silver go up, and our stock portfolios go up, and we're doing the smart thing. And as far as I'm concerned, being generous to the Chinese government, they're allowing their citizens to do the same thing for them that we're doing for ourselves.
You mentioned that the American empire is nearing its end. What are the signs you're seeing that lead you to believe that? And does Trump change anything? Because obviously we're now seeing almost a kind of return of a strongman sort of policy and a desire, it seems, to strengthen U.S. hegemony, which appeared to be weakening with the Biden administration. And prior to that, it seems like Trump is kind of trying to take the bull by the horns, tell the rest of the world how it's going to be, and put America first. Does him being in office change anything about the trajectory of where the American empire is headed? Is he going to make it worse? Does it really matter in the end? What are your thoughts?
Well, he's only been president for about a month, 6 weeks or whatever, so I'm going to give him the benefit of the doubt for the time being. But, America's been in decline since 1971 when when Nixon took the U.S. off the gold exchange standard and it defaulted on its international obligations in gold. And, I'm 76 years old, and I've saw America when it was great, when in the 1950s and the 1960s when I was growing up. That's the America that everybody knows and loves and would like America to become again. But the U.S. has now become so corrupted under the fiat currency system that, I'm cheering on Elon and the Donald and all the people he's got, working for him to fix this mess. But, I just get the feeling that, it just cannot be saved. But, I wish them all the luck in the world, because everybody wants America to be the great and wonderful country it used to be. But, like I said, it's so corrupted and twisted, especially their financial and the monetary system, and they're so far in debt that they're just never going to get out of it. So, in the end, everybody can see it. Okay, I mean, especially the Chinese. I mean, they're preparing for it. Europe's going down the drain. Britain's going down the drain. And like I said, he who has the gold makes the rules, and it's going to be China.
Well, switching back to silver for a moment here, the vast majority of silver is mined as a byproduct of other metals such as gold, copper, zinc, etc. It seems to me that this makes it very difficult to ramp up production to meet rising demand and to fill these supply shortfalls that you're speaking of. You said this is the 5th year that we've been in a silver deficit. Am I missing something here? How does this work if we need to get more silver and there's very few pure play silver mines in existence?
It doesn't work. It's as simple as that. It's impossible. Right now, I think I was listening to an interview by Keith Neumeyer yesterday or the day before, and he mentioned that, they're mining about 840 million ounces of silver a year. And if the silver was repriced tomorrow to about 10 times what it is today, which is a far more realistic price, that wouldn't change the number of ounces of silver coming out of the ground tomorrow, the next day, the next week, the next month, or the next year. You take a mine, any mine, I don't care what it is, what they're mining. Let's say it's a silver mine for obvious reason. They have this ore body, which they know how much is in, measured and indicated and reserves and, things like that. And the geologists have a mine plan, and they're going to drill this and they're going to drill that, and they're going along this way and that way, and then they're going to take out this ore body, and all. They're not. That doesn't change on a dime. And what else is going to happen when once silver is repriced at, let's say $300 an ounce, is that all of a sudden the indicated reserves that they have in the halo of deposit, of resources around their main ore body, that may be only 30 or 40 or 50 grams per ton, which is totally, unrealistic and unprofitable to mine, suddenly becomes wildly profitable. So, to extend the life of their ore bodies, the geologists will sit down with everybody and say, look, we can be mining this stuff at 50 grams a ton, and we got like 500 meters of this stuff, and we can make wild profits with it. So let's change our mine plan. Instead of high grading our mines, the 500 grams per ton over here, we're going to do 50 over here, make twice as much money. Okay. And what you may see over time is that to extend the life of the ore body, they're going to mine less than mine more, regardless of what the price is. I'm speculating on this, but the fact of the matter is that, most silver, like everybody knows, comes as a byproduct from other mines, whether it be gold or copper, or lead, link or zed. What am I saying here?
Zinc or lead. Yeah.
It all comes right. It all comes as silver is a byproduct for most of these, and if they're mining copper, they're not going to mine another, any more copper just to get the byproduct silver out of it. So yeah, I can tell you right now that, even if silver went to whatever, I don't care what the price is going to go, it's not going to change anything that comes out of the ground anytime soon, like in the next week, next month, or even the next year. The deficit is permanent. You have to understand that once this deficit hits, once the brick wall is hit, so whatever comes out of the ground will be the demand, because there isn't any more unless people are prepared to sell their physical holdings to make a big profit on it. So it's a brick wall that I won't live to see supply demand get back into balance. It's as simple as that.
So silver's share of global financial wealth is incredibly low on a historic basis at the moment. Peter Kraut recently cited it as low as 0.1%. What do you think the potential catalyst could be that could push that number higher, perhaps get more institutional investment into the space? Would it kind of be when that brick wall is hit, and is it a number go up type of thing where once it gets to a certain price, then the big players start to pay attention? What are your thoughts there?
Well, it's not going to take very much, and here's the reason. Everybody is talking about silver. Like 5 years ago, you could hardly find anybody talking. People like you and I were talking about it. When I started off in this business back in 1998, the only two people around were Ted Butler and Dave Morgan. Okay, and you could hardly anybody talking about it. And everybody that's come along since, if there's more and more talk, but as things have come up just in the last 2 or 3 years. 5 years or whatever, it's been building up to a crescendo where everybody that's in the retail market knows everything about it. Okay, you and I and everybody's listening to this podcast, as they're loaded up on silver already, they got their mining shares, and even on a day like today where silver's up 30 cents, the shares are booming. They're doing very well. Yesterday was a boomer of a day for a bunch of silver mining companies. So if silver went up $1, okay. Let's say silver went up $1 tomorrow. Okay, I guarantee you that it wouldn't take very much, and people will jump into this space. This thing is on a knife edge, and it could blow sky high anytime. And of course, the moment that these big commercial short traders decide that they're not going to sell short into the next rally, because they're the only thing preventing prices from rising. They're sitting there as short sellers of last resort, not-for-profit sellers, to prevent exactly what we're talking about. But this brick wall is coming. It's no way to avoid it. And I can guarantee you that as the moment the silver's up $1 or $2 or $3 in a day, which is that's coming, is that everybody with a cell phone and a brokerage account, which there are tens of millions, will type in the word silver or gold or whatever and buy whatever comes up on their screen, and the market will absolutely explode, if not within hours, certainly within days. It's not going to take much to set this whole thing off.
Do you think that we need to see a crash in the broad market for people's attention to turn more to precious metals? Can these things happen together? The brick wall being hit when it comes to silver supply, the end of paper manipulation on the gold and silver markets, and could the broad market be ripping at the same time, or do you think it requires some pain when it comes to the SPX and the Nasdaq for the Magnificent Seven for people start to realize that they're kind of holding an asset that's far worth far less than they paid for it, and then perhaps turn their attention to hard assets like gold and silver?
Let me make this perfectly clear, and I brought it up a couple of times, and Ted Butler talked about it for the last 40 plus years. Okay, the only reason that gold, silver, platinum, and palladium, copper, and a bunch of other commodities are at the prices they are today is because the big four and big eight commercial short sellers of last resort, all of which are bullion banks, okay, have been sitting on their respective prices since the United States went off the gold exchange standard. And the moment they turn off their computers, put their hands in their pockets, or are told to step aside, silver will be at some fantastic price within hours, if not days, whether the market is going up, down. It doesn't make any difference what the currencies are doing. It won't matter one whit. It only matters what the big 4-8 shorts are doing, and you can watch them right now in the markets in the COMEX trading sessions in New York or in the Globex trading sessions overnight. They're there all the time. Everybody can see them on the charts. The moment they stop doing that, the market will go no ask in a heartbeat, and you're going to see prices. Ted says that you'll know it's over when you see prices up $5 or $10 in one day, and you won't have to ask if it's over or not. You'll be able to just look at the price and tell. It's that simple.
You've mentioned platinum and palladium a few times now. These are metals that are not often discussed, not nearly as much as gold and silver at present. What are your thoughts there? You're saying that those metals are also being manipulated in the paper market. Is that correct?
Yeah, absolutely. I had a discussion with Jim Rickards about this, 10 years ago. And we were was it London or Vancouver? I can't remember. Anyway, we both agreed, you can't have palladium and platinum screaming higher, where gold and silver just sit there like a lump. So they have to sit on all of them. And that's exactly what they're doing. I follow these metals just, closely. I look at the bank participation report. I look at the COT reports every week. I've been doing this for like 25 years, and they're just as suppressed as everything else. Now, the Platinum Institute came out with a report saying this. They're now in the third year of a structural deficit in platinum. I think they're going to be using 1 million ounces more than it's being produced. Now, platinum is a tiny little market. You think silver is a small market. Platinum is ridiculous. And there's just no way that they can meet this demand. And it doesn't matter as long as they're sitting on the paper price of platinum. If you look at the platinum traded for the last 2 or 3 days, it's screaming higher. But then the short sellers of the bullion banks show up and hammer it into the dirt. I mean, I made a comment in my column that palladium has closed within $5 of the same price for the last 6 trading sessions in a row. That doesn't happen in a free market. And palladium is also another one that's in a supply-demand deficit as well. They're using more than they're producing. Like I said, this whole commodities complex, not just precious metals, but copper and uranium and a whole pile of other things, we're just using this stuff more than is being produced. And sooner or later, this has to come to an end. And like I said, as long as they're sitting on what I call the big 6 commodities, that's the 4 precious metals, copper, and West Texas Intermediate crude, which they control the price of through the paper markets. And as long as they can control those 6 major commodities, they can control the rest of the commodity. I don't care if it's rubber or tin or cocoa or lumber or whatever it is. They can generally keep the commodities complex in line. Now, this has been going on for 50 plus years. And because of the low prices, the supply has been drying up slowly but surely. And now it's manifested itself in silver and platinum and a whole bunch of other commodities, including copper. And, this is what is going to come to an end. And the moment that these bullion banks finally give up, then we're going to see not only commodity prices scream higher, but we're going to see all the currencies of the world and everything paper is going to be debased against hard assets. And that day is coming, and that's the brick wall that is coming in silver and a whole bunch of other things as well.
Okay, before I let you go, I have to follow up on WTI crude and copper. So you were saying these are manipulated as well through the paper market, and you expect the prices of those commodities to explode as well. If that's the case, how could that impact the economy at large, being how vital both copper and oil are to the global economy?
It's very simple. What we're seeing, you got to stand back and look at the broader picture. Basically, what's been going on since we went on a fiat, the U.S. went on totally, or the world, the entire world is now on a fiat currency system. The entire financial system, the bullion banks, the central banks, this has been a fight to keep everybody on the paper asset side of the street. They want you in Tesla, and they want you in all these AI stocks, and you name it, the Magnificent Seven or the Nifty 50, as it's been through, for the last 50 plus years. They want you in paper assets where, it's ephemeral. There's no real value to this stuff if you dig deep enough. So this fight against all things paper, including currencies themselves, has been going on in the COMEX and futures market for the last 50 years. And they've been trying to prevent people from going to the hard asset side, gold and silver being the prime examples of that. And this fight has been going on for that long, and the end is in nigh. You can see, well, take a look at gold. I mean, when I was a kid, I bought my first ounce of gold in 1967, I think it was 67. I paid $55 for it, which was an enormous amount of money in those days. I don't have it anymore. I think I sold it for like 75 or thought I got a good deal. Now we're selling in Canada, gold's like $4,400 an ounce. That is currency debasement. So this fight has been on between the paper markets and the physical markets for 50 years, and the banks have been at the head of this whole thing. And we're going to see a major shift from paper assets to hard assets, and what it's going to do to the financial system, the monetary system of the world. Well, I don't even want to think about it, but gold and silver and the precious metals and hard commodities will be the only thing left worth anything.
Well, Ed, this has been a fantastic conversation. So many insights shared. Before I let you go, tell us about Ed Steer's Gold and Silver Digest, what it is you do there and where people can find it.
Okay, I've been writing on the internet now for, I don't know, since 2007 at least. And I have my column comes out 5 days a week. Is about 260 columns a year, and I go in mostly on the precious metals, gold and silver in particular. You can just Google my name, Ed Steer, S-T-E-E-R, Ed Steer Gold and Silver. My website will pop up. There's a tab on there for a free sample column, and it shows you the kind of information that I provide to the market. And if that's the kind of thing that interests you, the freight is US $100 per year for 260 columns.
That sounds very reasonable. I'm going to go ahead and put a link in the description to Ed Steer's Gold and Silver Digest so people can go and take a look. Thank you once again, Ed, for coming on and sharing your knowledge with the audience.
My pleasure, Jesse.
Thank you for joining us today. This episode is brought to you by ARC, Silver, Gold, Osmium. The special they have on now are Silver Kangaroos 2023, 1 ounce, mint fresh, $2.07 over spot. To take advantage of this deal, call Ian Everard, the owner of ARC, at 307-264-9441 or send him an email at ian@arcsgo.com. This offer is while supplies last. Make sure to tell him that Commodity Culture sent you, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.